Hi there. There's been a big fall in inflation in the UK economy, so I thought we'd spend a few minutes looking at some of the key reasons why the rate of inflation has declined. Here's the chart showing that steep increase in inflation in 2021-22, peaking at just over 11%. And this, of course, was a major inflationary shock for the UK. And, of course, has brought about the cost of living crisis affecting many millions of households and businesses, not just in the UK, but across many countries as well. Again, you can see the rise in inflation in the United States, in the Eurozone here, even in Japan. And Japan, of course, which has been on the edge of deflation for many, many years, has seen a rise in inflation. China, on the other hand, is edging closer to deflation. But this chart does show the steep fall in inflation, in particular in the UK and also the United States. So why is this happening? Why is the rate of inflation falling so quickly, so sharply? Take a moment to try and write down, if you have a second or two, a couple of reasons why inflation may have fallen so quickly. The main reason for the big fall in inflation is a big cut in the energy price cap. Now, this is set by Ofgem. It doesn't cap total bills, it caps the unit cost per kilowatt hour of energy used by households. And that's come down from £2,500 in the autumn of last year to £1,923 in October this year. So that fall in the energy price cap has taken away some of that inflation from a year ago. Keep in mind, of course, inflation is the annual percentage change in prices. So price increases that happened 13 months ago now drop out of the inflation calculation. I track the IMF Global Energy Price Index, published monthly, and here it is. And again, you can see here that there has been quite a sustained fall in the IMF price of global energy, although they still remain much higher than they were in the pandemic of 2020. Second factor behind the fall in inflation is a decline in food price inflation, which of course has been at the epicenter of the cost of living crisis. Now, the food prices are still going up. The annual rate of increase was 10% in October 2023, but that's down from 19.2% in the spring of this year. So there's been a steep fall in the rate of food price inflation, although many people may not really have noticed that. That 19% food price inflation was the highest increase in the cost of groceries in the supermarkets for over 40 years. Now, of course, this is particularly important for households on average or below average incomes, where food is a substantial part of their budget. Food and energy prices take up a high percentage. So hopefully food price inflation will continue to come down. Again, here's the global food price index published by the IMF. So you can see here that globally food prices have edged lower compared with that peak in the index in 2022. The third reason, I think, for inflation falling so sharply is, in fact, what's happening in the used car market. Very interesting. 2023 used car prices, the price of second-hand vehicles, have been falling quite quickly. If you take the average value of a used car at 3 years with 60,000 miles on the clock, they're actually falling by 4.2% in October. That's just under £1,000 reduction in the average price. So we're seeing some deflation in used car prices, but in part that's due to inflation elsewhere. Car insurance premiums are going up, and that of course makes owning a second car, perhaps a used car, extremely expensive. So people are really cutting back. Used car demand is falling, and that's driving down the price. So falling inflation does not mean prices are dropping. So what we are seeing, of course, is a process of disinflation in the UK. I would argue that whilst the government is happy to take credit for halving the rate of inflation, their self-imposed target, by the way, most of the causes of disinflation are in fact external to the UK, especially the charts we showed, if you remember, the falls in the world energy and food prices. But the Bank of England's sustained period of increasing interest rates, up to 5.25% at present, will have softened the growth of aggregate demand. The UK economy barely grew at all in the third quarter of 2023. So softer aggregate demand will have limited businesses' ability to raise price, especially when costs go up. Inflation remains well above the 2% target. It's more than double that. And that, of course, is the job of the Bank of England to meet that target going forward. But this new data, the fall in inflation, does reinforce the idea that policy interest rates may have peaked. Perhaps one more rise in interest rates to come. But as we head into 2024, the realistic possibility that interest rates will plateau and perhaps start to fall in the spring or summer of next year. Thanks for joining in this video on the UK economy.